Hey everybody, it's Jeremy here with the Guillette Group, powered by Local Real Estate. We're going to talk about the second quarter market update. We're going to give you the data. We believe evidence defeats doubt, so we want you to be as informed as possible when we think about real estate. Take a look at the slides, and I'll see you guys when we wrap it up. Okay guys, so here's the slides. We're going to start with the national data first, and then we're going to talk about the local data in Southwest Florida. So in looking at the first slide here, I actually love this quote. I think it's so appropriate right now. So Mark Hackett, he's chief of investment research at Nationwide, said, when you have a void of information, emotion tends to drive the decision making. I don't think this could ever be more true than right now because of the market that we're in. So as I said in the opening, we're here to give you the data. What you choose to do with the data obviously is up to you, but we think it will really help inform any strategies that you might have or decisions that you make with regard to buying or selling real estate. So you guys have probably seen this. It's no secret, you know, the market is up nationally. As of May, it was up 15.4% year over year. That's one of the largest increases in 1 year on record. So it's definitely picked up and has been accelerating, as you can see, for the past 4 to 5 months. We get asked all the time, is this a bubble? You know, what's going to happen? And this is another great quote, chief economist from CoreLogic. But, you know, there's marked differences in the run up in prices between 2005, which was a bubble fueled by risky loans and lenient underwriting. Today's loans with high risk features are absent, and mortgage underwriting is more prudent. So you'll actually see here on the next slide, the number of originations with lower than a 620 FICO score in 2006 was 376 billion, yes, with a B, as opposed to 2020, which was 74 billion, so roughly 20% of that number. Here's another great quote. These outsized increases have raised concern that a home bubble is emerging. However, the conditions today are quite different than the early 2000s, particularly in terms of credit availability. I'm actually going to show you a graph here. There's a couple different equations at work, but ultimately they blend this to create an availability index. And you can see back in 2005, 2006, almost anybody could get a mortgage, you know, whether you qualified or not. Today, that's not the case. So there's more stringent underwriting, and just, you know, what's required to actually get a mortgage is a lot more documentation. So it's not as fun to go through the process. There's a lot of paperwork, a lot of submitting of documents, but ultimately it's yielding a much stronger market for us, which is important. So here's a really important, I would say, driver of what we're seeing, especially as it relates to new construction and pricing. The main driver of the housing shortfall has been long-term decline in the construction of single-family homes. I'm more visual, so when I look at it this way, it makes a little more sense for me, but you can see 13 consecutive years we have been below the 50-year average. And that really stemmed from the 2006 and the distressed properties, which brings up forbearance. You know, there was a lot of suspicion that there was going to be a lot of forbearance, especially early into the pandemic when people were out of work and, you know, states were closing. But the original projection was as high as 30% of mortgages would be in forbearance. The top that we saw was May of last year. It was actually only 8.5% roughly. And today we're at 3.5%. So there's actually very few households that are actually in forbearance. In fact, it's under 2 million at this point, which, you know, is quite low. And in fact, 2006 to 2014, there were almost just over 9 million households that went through foreclosure. So this next quote, I think, is a good one. The likelihood of us having a foreclosure crisis again is about 0%. So that's important to know. All the economists and the folks that are looking, you know, at the foreseeable future, barring any wide type of macro event, they just don't see a significant change coming to the housing market. In fact, Lawrence Yun, who is the chief economist for the National Association of Realtors, you know, he's flat out said home prices are in no danger of a decline due to the tight inventory conditions, but he does expect prices to appreciate at a slower pace by the end of the year. So what does that mean? We're not anticipating prices coming down. So for all you guys that are saying, hey, we're not in a rush, we're going to wait a year, I'm not sure that's the right strategy if you want to put life on hold. You know, effectively, we're not anticipating a price decline. We're just expecting that we're actually going to see kind of a tapering or a slowing, I should say, of the appreciation. Now, this is crazy. So this is the average days on market. Again, obviously, we're looking at the whole US, but for all of the country, the average days on market right now is 17 days. There just has never been a market like this in history. And in fact, when you look at distressed properties, there's hardly any. So, back in the peak when we went from 06 to 2012, almost a third of the market were distressed properties. And as of right now, less than 1% are distressed. So this is actually quite interesting. I think people, when you look at the kind of the price ranges, I would say, what's surprising is the really high end of the housing market is actually what is appreciating. Well, I shouldn't say appreciating, is actually selling the most. So this is the percent change in sales. And you can see the over $1 million category is up 150% in terms of the number of sales. But you can see even at the 750 and 750 to $1 million, it's up 120%. So just huge growth in terms of closed sales. Now, said another way, with all those closes, there's been a push on all the inventory, and you can see from 2011 through today, we're far below the average in terms of the months of inventory, number of houses for sale. And this actually shows it again. So this is just the last 2 years, but especially as we got into December, January of this year, we were under 2 months of inventory again nationally. But we're going to show you also what that looks like specifically in Southwest Florida. Now, this relates big time to buying power. So about half of our market, I think it's about 48%, is cash. The other half of our market, of course, is using lending and leverage. So when you look at the mortgage rates, you can see just historically low. We're still hovering at or just under 3%. This shows us 2.77% as of August 5th, I think. But here are the projections. So this is kind of a blended average of the 4 different groups that kind of make the suggestions here. And you can see Q3 of this year, we're going to be, and kind of are pretty much at that 3 range. But by the second quarter of 2022, we're expecting to be closer to 3.6. So it's about a 0.5% increase. And when you look at it, it does look like it's going to continue to grow. This actually shows as high as 3.6. But you're looking at, again, a 0.5% increase. So what does that really mean? I would say, everybody's price point is going to be a little bit different, but it's about 5% of home value that you're going to lose. So if your home, if your budget was $500,000 as an example, you're going to basically now top out about $475,000 based on what you can pay, from a monthly budget perspective. Okay. So now we're going to transition to the local market. I think you're going to see not only do we align to the national, but in some cases, we're feeling even more pressure here in Southwest Florida. So when we look at new listings, you can see we're actually down both single family and condo year over year. And when you look at, for, I guess, the broader part of a year, the number in bold is just the past month. But when you look at year over year, you can see that listings are just down pretty significantly on the whole. There's the one anomaly in there, April versus April last year, of course, which was basically the world had come to a halt. So, you're going to see that on most of these slides. The pending sales here, you're going to see have been way up, over the past 12 months, pretty high average, both for single family home and for condos. And then when you look at the closed sales, it's just astronomical. I mean, we are way up, year over year, probably in the ballpark of about 70%. So when we look at days on market, if you recall, we were at a 17-day average. We're pretty close to that, I would say, in Southwest Florida as well. Maybe slightly below that of late, but again, pretty close to the national average. This is a staggering slide. So this is actually a slide that shows the percent of list price. And I think this is an important one, and I'm going to pause here slightly just for our buyers, but you can see that as of July, we were at 99.4% of list price for single family, and the 2 months previous, we were at 99.6. And then on the condos, we've been at 99, went to 99.7. We were 100.2%. That means for the market, we were actually over asking as an average. So anyone that's working closely with us right now, you know, we've been sharing your offer needs to start at or over asking. This is why. This is the data. You know, we don't want you to get frustrated writing multiple offers and 3 months later having the regret because the market has continued to climb. So this is why we have those conversations with you. I know it's not what you want to hear. All of us want to be able to find a deal. It's just, this isn't the market to find a deal. So I think the data is helpful in just capturing that information. Okay, and then the last slide here is the months of inventory, and you can see we are at 0.6 for a single family and 0.4 for a condo. That's actually measured in weeks, which has never happened before prior to this market. So it really just talks to, if you're going to go after a property, you got to go aggressive and you got to go fast. And that often means for many of you guys making a decision, potentially sight unseen if you're out of, if you're outside our market or out of state. There are tools, and we can talk through that with you on how we write those types of contracts to protect you and get the business, or to get the property actually under contract for you. So that's it for the slides. I hope it's helpful. Again, this was the second quarter. We'll do this again when we get the latest data for Q3. Well, I hope this was helpful for you guys. This is actually just going to be part one of a two-part video that I'm putting together for you. Next week, I'll load a second part to this, and we're going to talk about what it feels like to be a buyer or a seller in this market. If that interests you, check it out. I'll have it loaded here. Again, it'll be about a week before I get it up.